to TheoTrade. This is Don Kaufman. Here we are on February 17th, 2016. You are watching the Theo Night video, but it's not even nighttime yet. Now, I wanted to do something a little bit different during kind of tonight's video. Maybe you're watching this at night and maybe talk about kind of a trade that's in play. So here we are. We're still about an hour to go to the closing bell, and I wanted to look at a trade setup kind of with you that happens to really kind of pertain to intraday, but this kind of trade setup can really, it kind of transcends in trading, and I just want to give you kind of a quick heads up of what I'm looking at here. So again, the S&Ps right now, yes, they are up 33 points today. Just go over quickly to a chart. Here is actually the cash open right at 7:30. And again, I'm on Mountain Standard Time. I know nobody actually lives on Mountain Standard Time, but I'm in Arizona. So that's the cash open. Here we are, about an hour to go to the close. It could be a Head and Shoulders. I'm just kidding. But markets are just off their highs of the session, 6 points off the highs of the session. The Nasdaq Futures exploding to the upside, up 2.36%. And to me, therein lies a trade. So let's step back from the market for just a moment and, not worry about the fact that, look at the XLF. It's only up about 1.25%. A little bit of weakness out there. Bonds rallied back up a little bit on the cash session. So what's the trade? Why am I actually spending time during the trading day and not giving us a kind of a quick market recap here? We're seeing kind of that big, rally back that is, I guess, prototypical in the midst of volatility. So here it is, kind of that prototypical explosion to the upside. What, again, you see is one of the hallmarks of volatility are some of these rallies. And that rally in the S&P thus far has gone from, again, I'm not even going from the reactionary low here at 1800, but really starting kind of last Friday from 1824 and exploded all the way up to basically 21 at this point. It's a 100-point up move. And if you want to count from the reactionary low over there, it's a 125-point up move that we've seen. Okay. But in today's trading, here's an opportunity that I see. Okay, and again, I'm going to explain this on much more of an intraday kind of basis. The S&Ps early in today's trade were already up 33 prior to the FOMC minutes that came out. We call it an FOMC announcement. The minutes, basically, it's the previous FOMC announcement. It's the minutes. What is it? Okay, what does it tell you? Doesn't matter. Why doesn't it matter? Because even if you read the thing, it still doesn't tell you what order flow is going to do. Like, just because you read some announcement, you're going to get a much better idea than a computer is getting by reading it? Probably not. You're going to get a better idea. Even if you had a better idea, if you had the minutes in your hand a week ago, you still wouldn't know what to do. Well, the trade idea that I've got today is I look at the markets and I think to myself, they're up, and they're up considerably. And I'll tell you exactly when I did this. They're up, and they're up considerably. And just about an hour to go to the FOMC announcement, I figured, let's just sell something. Okay? Let's just get a little short position. Now, again, this is for an intraday trade. This is outside of all the other positions that I have on, which I'll reference here momentarily. Okay? So I just throw on a little bit of a short position. Why do I pick a short position? And moreover, what do I short? So to get everybody kind of thinking like a trader, why a short position? Number one, the S&Ps are already up some 32, 33 points when I short the market. You can short the market in a number of different ways. You can use futures. You can use stock. You can use options. I mean, again, it's a duck, it's a chicken, it's a squirrel. It doesn't matter. Okay? A product is a product. I'm just getting short the market. So I go out and I short the market. And I short it when the S&Ps are up about 33. Why? I look at a very simple idea here. No, there's no technicals involved over here. The Head and Shoulders, I kind of said tongue in cheek. It's a very simple equation in my mind. Could we continue up from where we currently are? Yes, of course. Could the S&Ps be up another 15 points from where they currently are? Yes. Is that likely? Probably not. I mean, we could see the S&Ps up 50. We have. All right. If you go back over here, some pretty explosive moves to the upside over here. So in my mind, I'm thinking, well, the S&Ps could be up as far as 50 points. I mean, that's another 18 points to the upside. But reasonably speaking, the S&Ps will probably only go up maybe another 10 points. But when the FOMC minutes come out, what could be the downside potential in there? And the answer is, could be phenomenal downside potential. I mean, they're up 33, 34 right now. These things could get clocked. So I look on my screen and I pick out of the major index products. All right, so I look at S&Ps, I look over here at the Nasdaq, I look over at the Dow, the Russell, and I pick what product on a percentage basis is up the most. Stands out to me the Nasdaq. So I'm thinking to myself, if the markets are going to come back down, okay, the best risk reward for my buck would probably be in the Nasdaq. So I go out and I sell a Nasdaq future. Now, I'm not telling you should go out and sell a Nasdaq future over here because there's pretty extreme risk in futures contracts, right? It's a big contract. Now, if you're not comfortable with the Nasdaq future, that's okay. And I'm showing you right now, I am actually down on this trade. But I absolutely love the risk reward scenario that I've presented here. They're already up 100. Ooh, what are you going to do to me? You're going to go up 150? It could. I mean, they could go up another 50 points. Those NASDAQ futures could go up another 50 points from where they currently are. Ooh, okay. What's my risk going to be? I could lose, $1,000. However, think about the downside opportunity in here. If they were to go down, oh man, it would be all over but the crying. And I like to set up risk reward where in this situation, I kind of feel like, well, I could risk 50 points to be able to make almost 100 points. And that's a reasonable setup. And I'll do that trade all day and all night. And that's why I like to sometimes just take a little time out and just play a trade, which right now I'm down a whopping $65. Listen, the day is far from over. This is an intraday trade. And it's not something that I want you to be able to go out and run out and do tomorrow. But when you got a marketplace, okay, that's just on fire like this, and we've already seen tremendous upside, okay, hey, there could be a little bit more upside, but I kind of like my odds at this point. Like, I don't think that the market has a 50-50 shot. When I say I don't think it has a 50-50 shot, does it have a 50% chance in the next hour today of going up another 100? Okay, no. Does it have a 50% chance of reversing and going down 100? No. Okay, but if we do go up, we could probably only go up maybe another 50 points. But if we go down, could we have just this wild, out-of-control downside reversal? And the answer is yeah. And we've seen some of that in some of the recent volatility. So again, start kind of, building your trades outside of what you think is going to occur in the market. All right. Base them on something a little bit more tangible, like, again, just a simple idea in terms of risk reward. Now, tonight, I'm actually going to be doing a coaching session. So remind everybody about the coaching session this evening. That is Wednesday, okay, February 17th, tonight, right in the Theo chat room. That is going to be 7 p.m. Central Time, 7 p.m. Central Time, 8 p.m. Eastern Standard Time. We're going to be talking about calendar spreads and volatility bombs, okay? Another couple of things. I have closed a number of trades. Okay, one of the trades that I have closed over here, profitably, Amazon. So I closed out of the Amazon trade, profitable on the Amazon trade. I had purchased the 500-505 spread, the 500-505 spread. I bought it. I now sold out of it. I believe I sold this thing, okay, in the neighborhood of about $3. Okay, and 70 cents. Again, I'm going in my order queue over here. But again, I did close out of the Amazon spread, $3.70. There it is. Next trade, okay, EEM. So if you were following into any of the EEM trades that we did, okay, in the EEM, I sold an out of the money put spread. I've now actually purchased that back. So I've bought it back. Nice gain in there, about 60%. XLE. Okay, I've gone ahead and I've actually closed out of a short put spread. So we sold a put spread in XLE. Gone ahead and actually closed out of the put spread. Again, profitable trade. Next, okay, last but definitely not least, the spiders. I had an iron condor in the spiders. That iron condor was right out here in the 35-day expiration. Where's that iron condor now? Gone, closed. We initially sold the iron condor for right in the neighborhood of about $2.20. Okay, everything in this iron condor was thrown at us. Some of the heaviest volatility we've seen any time since 2012 is thrown at us. We sustained through all that volatility. Okay, so again, sold that thing for $2.20, bought it back for about $1.55 today. Is it a huge windfall profitability? Absolutely not. But to walk away alive with any profitability is a very good thing. Going to be looking for a lot more iron condor opportunities here in TheoTrade's chat room on the next couple of days. Probably looking for, again, a bit of an iron condor. I'm going to look for one the next couple of days that's slightly skewed. I'll go over that tomorrow in the Theo chat room. So again, I'm looking for risk reward in today's marketplace, and that risk reward is, well, you know what? I sold the Nasdaq Futures when they were up. Okay, I'm only 10 points off where I currently sold them. Again, I like the risk reward of trades where the S&Ps are already up 33, 35 points. Okay, take a shot to the downside. And sometimes shots like that are more than worthwhile. Join us again tonight for the coaching session. I'll be back in the Theo chat room tomorrow. Thanks a lot, everybody, for joining us here at TheoTrade.